Taking a look at today's interest rate markets, let's look at the 10-year note futures. As they're realizing some selling pressure for a second day, we are seeing the 10-year note futures pushing back down towards that 118 handle, 117.31 as we move towards the close. And if we were to settle right around here, this would be the lowest close in 7 sessions. So basically a week and a half closing low for the 10-year note futures. As we continue to see some adjustments here as we move through the week. And I think when you look at the driving factors today and throughout this week, central bank activity this week, Fed activity next week, ECB announcement coming up this Thursday, and the market is there's discussions now within the market construct that the ECB may go 50 basis points at this announcement on Thursday. And if they do, that's larger than what the market had anticipated, I think. And so we're seeing some adjustments there, and I think that that's having an influence on the pricing structure here in the U.S. As we move towards the Fed announcement next week. Also, we're seeing the equity markets bouncing today, so I think that that's also a shifting dynamic, and the dollar coming off for a second day in a row. So all these things, I think, are having an impact in the treasury markets, and so you're seeing, again, some selling pressure at various lengths across the curve right now when you look at the duration curve. What is interesting that the 10-year yield today, we're seeing it up 6 basis points. So about 302 basis points, some 296 yesterday. And the entire curve from the 6-month out to the 10-year, basically all you're seeing, most of those durations shifting higher by about 5 or 6 basis points. So the entire curve is moving higher here today and staying pretty much in the same shape. So those short-dated inversions are still continuing to play out here. Now the back end of the curve, when you look at the 20s and the 30s, they're not selling off quite as steep today. We're seeing, I think, the 30-year down, or excuse me, up about 3 basis points, and the 20-year up about 4. So a little bit of a tail off there at the back end of the curve, but nonetheless, the short end to the middle of the curve from the 6-month to the 10-year, all selling off today. We're seeing those yields shifting higher and the curve maintaining the shape that it was in just yesterday.